Hey, it's 2023 and here's your market update. Big thing to know is 2022 was all about the Fed raising the interest rates. I mean, literally you saw interest rates more than double from where they were at the end of 2021. And this definitely had a huge effect on what was happening in real estate. You could literally see as the interest rate ticked up, sales were starting to go down. And we saw a big impact on this in the fourth quarter of the year when interest rates literally hit 7% around the October timeframe, and you saw a decline. December was the slowest sales month on record since 2015 and the slowest pending month on record since 2013. That means that January is likely to be soft. We're here at the end of January, and I wanted to wait because we wanted to kind of see what the market was signaling and what would happen with the Fed. We expect the Fed to raise the interest rates 2 more times this year, probably a quarter point each. And literally they're working to cause a recession or slow the economy down. Now the hopes is that this is going to be a very mild recession. This is not going to be anything like 2008, but there are some people who are kind of having that conversation if you watch some of the financial channels. Big problem there is we don't think the Fed can hold the interest rate high for long. The reason is because the federal debt is also associated with what the interest rate is, and the higher that interest rate goes up, the more the debt payment has to be every year. The Fed is paying an interest payment every year, and that is likely to go up significantly in 2023. So the federal government probably will not be able to handle that. Big thing to know, people are still out buying. We see activity. We definitely saw more calls and activity on our team, and it sounded like across the board when I spoke to a lot of my peers who are top real estate agents as well. We saw an increased activity at the January 2023 versus what we saw in the final months of 2022. This means that the activity is out there. If you're thinking about selling your property, you probably want to move fast and also make sure you price your property aggressively. Don't think about what you could have got in 2022 or 2021 because that time has passed. It's now 2023 and the market is different. If you're thinking about buying a property, here's the people that should be thinking about buying a property in the first half of 2023. If you absolutely need a place to stay, if your family has expanded, or you're just simply in a property that's way too large, why pay all the extra money in heating and cooling if you're in a property that's way bigger than what you need? Go ahead and get out of that property, get into a right size property. And the benefit now is you get to choose the property you want to be in. When interest rates were low, people couldn't even find a property. And then on top of that, when they would get to the property, there would be 10, 15, in some cases 20 offers. We had a property last year that had over 70 offers, end of 2021, and we had another one that had 15 to 20 offers last year. So you want to make sure you know where you want to be and be able to choose that property because there's not as much competition. You can also have the normal process like having your contingencies for appraisal and inspection still left in the deal. A lot of you don't know, many people were actually cutting that out of their offers because it was so competitive. People had to try to figure out a way to be able to get their offer accepted in 2021 and 2022. Now things are cooling down, and now could be your time to take advantage on the buy side. And we expect interest rates to come down in a year or two. Get your property now and then refinance to a lower rate. And if you're worried about the interest rate you're going to pay now, because sellers are willing to pay closing costs, you can actually use some of that money to buy your rate down to get a lower rate for right now. Now, here's what we're expecting through the end of the year. Around the end of the year, we expect to see an uptick in the number of purchases because the Fed is probably either going to stabilize or begin to lower rates. And so at that point in time, we'll see more properties probably come to the market, which will keep prices about the same. We expect the price drops to kind of be at a lowest point or hit their trough probably in about April, May, early June, and then you begin to see a stability, and then you begin to see an increase probably by the end of the year, only slightly. I'm Chris Willa Williams with the Go Getter team. We're of course here to serve you in Metro Atlanta. If you have any questions about real estate, whether now is the time for you, we always give you an honest answer based on your personal situation, not based on what our motivations are. So we're here for you. Definitely like and subscribe our video if you want future content, and we'll be happy to produce it for you.